A very warm evening and welcome to KTN Business on this 21st day of October. My name is Abi Agina. We have quite a lot coming up for you. We begin with the Central Bank of Kenya has announced plans to drastically strengthen bank supervision in the wake of a second bank being put under receivership, with Imperial Bank becoming the second bank in 2 months to be placed under receivership. The regulator admitted to missing the warning signs, and as Ashley Mazuri reports, the improved oversight is expected to bring stability to the banking sector.
It is that statement from the central bank governor that pointed to the weakness in the regulator's supervision of banks. In the case of Imperial Bank, the central bank last week disclosed that it was indeed Imperial's board of directors that had alerted that bank to evidence of irregular lending, which led to the receivership. The overhaul and reorganization of its bank supervision arm will ensure the regulator to keep a close eye on banks and troubleshoot problems before it's too late.
I would want to insist that the case of the Imperial Bank is unique, it's not systemic, and it has been isolated, and the Kenyan banking system remains safe and sound.
Imperial Bank was last week placed under receivership for what was termed as malpractice only 2 months after Dubai Bank was also taken over. The central bank is expected to train its staff to uncover information technology-based fraud and will also develop more current supervision guidelines.
We will do our own in-house introspection and see why did we miss this, even did we miss something.
The central bank has hired US-based FTI Consulting to audit the bank's books, processes, and governance system to unravel the unsafe and unsound business conditions to transact business that led to the closure of the mid-tier lender last week. The financial malpractices at Imperial Bank are being linked to the bank's co-founder and boss to the long-serving group managing director, Abdul Malik Jan Mohammed, who passed on in September and is alleged to have been running a parallel bank within the lender. The forensic audit report, being jointly developed by FTI and the Kenya Deposit Insurance Corporation, is expected next week, with investigations focusing on whether loans were issued irregularly or the financial numbers published showed how the bank had really performed. KDIC is also expected to chart a recovery plan for the bank, which the governor said could include recapitalization or liquidation of the bank. Ashley Mazuri, KTN Business.